Okay, let's talk about Nancy. Let's talk about Nancy. So for those that didn't get the news on Nancy, Nancy has made some purchases, and I'm probably going to match Nancy and make some of the same purchases. So $250,000 to $500,000 of Google. The specifics are $50 contracts with $150 strikes on Google expiring 1/16/26. So in the money call options. Same exact thing on Amazon. 150 strike call options expiring 1/16/26. Then NVIDIA, I don't know exactly the strikes on this. I think she just bought shares. She did exercise her contract. So I think she has like 40,000 shares of NVIDIA. She did buy NVIDIA at 120 in the summer. So NVIDIA is not that far off from where she bought it at in the summer. She bought 10,000 shares at 120 back in July of 2024. And then this thing, Tempest AI, healthcare AI startup. She bought about 100,000 of $20 call options. This thing is now $40. It's up 18%. It was at $32 last night, and then it's up now because of Nancy's buy. And then she bought about $1 million of VST. Vistra, this is up 327%. It was one of the best performing stocks last year. It is a data center energy infrastructure play. It looks like, based on what Nancy's saying, from what I'm getting from this, is do not sell your large caps. That's what I'm getting from this. That's what I'm getting. Nancy is saying, hey, I know everyone on TV is telling you to trim your large caps to get into small caps and mid caps and all this stuff. But what I'm seeing, and this is kind of why I like when Congress people trade. I mean, is it a little weird? Yeah, but if we get to see it, that's kind of all I care about. What I'm seeing from her is her saying, hey, Google's going to keep doing well. Amazon's going to keep doing well. NVIDIA has no competition, because if she thought NVIDIA was going to have massive competition, or there's going to be these regulatory hurdles and bureaucracy of stopping them from selling into China, yada, yada, she probably wouldn't be as heavy as she is as NVIDIA. And then number two, if you're buying Vistra, that thing is already up 320% over the past year. To buy a stock up 320%, you've got to believe that there is going to be massive, massive data center growth, basically what Jensen's thesis has been for the past couple of months now, and that there's going to need to be energy infrastructure to be able to serve all that. That's what I'm getting from Nancy. Now, as Doug says, do not sell your large caps unless it's Apple. She did sell 31,000 shares of Apple. And I mean, look, I've been relatively bearish Apple while acknowledging that Apple will go up with the market. But this is a good segue. Apple's down 2%. Again, Apple doesn't fall 2% that easily. It's had multiple 2% down days over the past week. Why is Apple down? Well, we got a new report on their iPhone sales, and it's not good. It is not good at all. So this is the report we got this morning from Counterpoint Research, which is relatively trustworthy when we look to Apple. Here's what they said. Apple's iPhone sales in China fell 18.2% during the December quarter. I mean, I saw that number this morning and I was like, wow, that's just not good. Slipping to third place in the market, according to Counterpoint, Huawei reclaimed the top spot, driven by a 15% year-over-year surge. Apple's new AI-enabled iPhone struggled to maintain momentum as key features remain unavailable in China because OpenAI is not available in China. This is something that I remember talking about in July of 2024. It's like, wait a second, what LLM are they going to use? Like, OpenAI is banned. Like, how are they going to use OpenAI? While the company seeks a local partner for AI infrastructure, aka Baidu. So that's going to take time for them to load up Baidu's LLM, if it's even that good, into their iPhones. Globally, iPhone sales dipped 5% for the period. China's smartphone market saw its first quarterly decline in 2024 after steady growth earlier in the year. Apple's having the same problem that Nike's having. Nike sells a lot in China. There is a recession in China right now. And although stimulus is a catalyst, at the end of the day, if people don't have as much money, and we don't even need to talk about the real estate crisis in China, but if people don't have their net worth increasing because Chinese stocks have not gone up and real estate has only gone down, then where are people getting all this disposable income, unless they're very wealthy, which is not the majority of Chinese citizens, to then upgrade their iPhones to the latest model, especially for a remedial upgrade, right? For a little bit of camera features getting better. So it's not in the best situation. And so from that perspective, I do think Apple's going to be in a little bit of a tougher spot. We don't have any new products. The foldable iPad, give me a break. Vision Pro is not a thing. Meta's eating Apple's lunch when it comes to VR. I just don't know what the bull case is. And by the way, this is not just me saying it. We did get a couple of downgrades today on Apple, which is also probably why it's down 2%. So the same firms that we were looking at in October 2024, right before the iPhone came out, that were saying, well, we think there's going to be this super upgrade cycle. Today, they're saying, yeah, we are lowering our price targets. And we're lowering our price targets because we're a little afraid that Apple's not going to be able to hit these growth targets. Here's what Jeffrey said. They lowered their price target from 211 to 200. We had another one go from 275 to 230. The downgrade is driven by expensive valuation at 32 times fiscal year 2025 PE, 1.7 times fiscal year 2025 PEG, and a 15% premium to our long-term DCF estimate. Both near-term and mid-term consensus forecasts likely being too optimistic. Our view that consumer feedback on AI functions in smartphones, including Apple Intelligence, will remain muted, and the potential confirmation of delays in Apple's advanced packaging roadmap for iPhone, which may further support an underwhelming outlook for AI on smartphones. Someone says Dan Ives was wrong on this one. This is one I've never agreed with Dan Ives on. Now, look, I don't want to say Dan Ives is wrong because Apple is Apple and they find a way to come forward. So I don't think this is like short Apple by puts on Apple. I think you just can't do that with a company that has $100 billion in cash. It's just Nancy's not buying Apple. She's buying Google's, Amazon, and Nvidia because she sees the growth coming. And I think if she sees the growth coming for them, they're just better Mac 7. She didn't buy Tesla. She didn't buy Microsoft. She didn't buy Meta. She bought Google, Amazon, and Nvidia. And I think I'm going to follow her. I think I'm going to follow her later today. Yeah, they hold too much cash to sell. Yeah, I don't think Apple's ever a sell. You know, like I think Apple's maybe a trim, but if you're long-term Apple, you've been in Apple for a long time. I don't think, you know, Apple's just too important long-term. It's just a question of, is the risk to reward on Apple as good as it is on Amazon or Google or Nvidia? And it's like, I don't know. I just at a 34 PE with 0% growth, Google, Amazon, and Nvidia is growing at least 50%. Google and Amazon are compounding like 15%. You're still getting more growth and bang for your buck instead. But that's what we got in the context of Nancy. Let me know if you guys are following Nancy at all. I think I will today because at this point, I already wanted to get into the Mac 7 this year. You guys know I've been wanting to get exposure to it. I started with Tesla. It's time to get heavier into Mac 7. Nancy was the confirmation I needed to say, you know what? If she's long Mac 7, then she obviously does not see any headwinds. Maybe they're going to be volatile. Maybe they'll come down. But that's why she bought deep in the money call options, because even if they do come down, she's still going to be green. And she thinks that the big keep getting bigger. And I think it's very hard to deny the Mac 7's cash flows, their net incomes, and Apple, Google, and Nvidia. I mean, they're not, or Amazon, Google, and Nvidia. It's not even controversial to buy those names. But Nancy saying that she's long again, to me, just confirms, okay, this is a no-brainer at this point in terms of how she's thinking of the long-term potential on these. Amit, what is your prediction for rate cuts, 3 or 4 or none? I think we at least get 2. I think it's gonna be very hard to only get 3 cuts, especially with CPI falling off a cliff. We looked at automotive prices with Chris the other day. They are falling off aggressively. Excess inventory definitely exists on a lot of these dealerships. That's going to cause prices to come down. Shelter's coming down. On the CPI report, energy was the main source of inflation, not shelter, for the first time in like 5 months. So I think, and what's his name? Christopher Waller on CNBC last week. I mean, dude, the guy was the most dovish you could expect. So again, to kind of wrap up this conversation on the macro, I don't see the bear case, especially with Trump in office, outside of the market going gung-ho about tariffs not being the thing that they want to see from an inflation perspective. Outside of that, it's risk on. It's risk freaking on. And that chart I showed this morning about companies beating earnings estimates by 10%, it's risk on in a way that's justified. Because what's the biggest argument that we heard around New Year's Eve? The market can't justify valuations because earnings growth is declining. Not so far. Earnings growth is up. And I think Nancy's buying Google, Amazon, Nvidia because she's like, earnings are only going to keep going up, which means these valuations are not some egregious, exuberant type of euphoric play on the market. It's rather appropriate for companies that are in a once-in-a-lifetime revolution that are capitalizing on it. And so it seems like that momentum is not dying off anytime soon. Amit, any guesses on Netflix earnings? I have no clue. We'll cover it today after the bell. Look, I've never loved Netflix as a stock, but as a company, they've absolutely outperformed. And, you know, the stock has outperformed as well. They bottomed at 150. Now they're at 858. So I was dumb for not buying it at the time. Didn't see the vision. Nonetheless, is it worth $360 billion? Maybe, maybe not. I think they're going to go subscribers. I think they're going to be fine. Q4 was probably a great sort of holiday season for them. Guidance should be strong. But does this thing go to 1,000 on good earnings today? I don't know. Does it tank to 800 and that's a good buy the dip? I mean, I think it really depends on how much subscriber growth they think they can estimate, along with how much cost they're going to impose on themselves, because Netflix is now making a lot of their own original content. They spend upwards of $15 to $20 billion a year making content. If that price can go down and subscribers can go up, maybe there's an argument where Netflix as well. Netflix trading at a 43 PE, got to get closer to 20% growth to justify that. I think they're just under 20% right now, top line. So that will be important today after the bell. Rocket Lab is up. Rocket Lab got upgraded this morning. Rocket Lab up, wow, 8%. Okay, that's a big one. Rocket Lab got upgraded, I think, by Citibank to 35. Correct me if I'm wrong. And that is why we're seeing some of a run on Rocket Lab. Trump did talk about conquering Mars in his inauguration speech. So I mean, that seems relatively bullish for the space sector. And yeah, Citi upgrading from 22 to 35. That's a pretty big upgrade. If you're going to conquer Mars, I mean, you're probably going to need some companies to help conquer Mars as well. So yes, it does look like Rocket Lab is getting some momentum here as well. Okay, let's take a look at what else we got in the pre-markets, and then we'll look at some other stuff that we've got going on. SoFi currently is at 2.4%, 1690. I am thinking of potentially buying shares on SoFi before earnings just for the hell of it. The only reason is because the chart looks incredible, and we talk about that on Technical Tuesday every day, which today we'll also have Technical Tuesday after earnings. But outside of the chart, this should be the quarter, hopefully, where SoFi doesn't pump and dump, because they're going to have a phenomenal beat and a phenomenal raise. Analyst expectations are relatively low. They're going to guide, hopefully, for a 20% growth, full year profitability. And the loan platform product that they really started initiating in Q3 of this year might see some stronger tailwinds that gets the street a lot more excited to think of them more than a bank. So I don't know. I haven't made up my mind yet about SoFi. We'll see. SoFi tends to pump and dump every time on earnings, even when they triple beat. Don't know if that's going to happen again, but if there was any quarter for that to change, especially in 2025, after Noto's guy won the presidency and all the banks absolutely demolished earnings, you would think SoFi catches a bid if they can crush earnings, which it seems like they'll be able to do. So we'll see how SoFi ends up playing out over the next week. Google's up 1.67%, Apple's down 2%, Amazon's up 1.5%, Robinhood 3.75%. I think Robinhood does get to 50 at 9:30 when the market opens. It got there in the pre-markets. I am thinking of getting a lot more excited to buy Leaps on Hood. I mean, I just don't think the growth is necessarily stopping. I already have Leaps on Hood. I'm thinking like, hey, I think this story is only getting better and better and better. And they are still trading relatively cheap compared to the growth that they're about to put up. So like, this is not a situation where the stock going up should scare you. It's a question of why is the stock going up? And is it going up on irrational exuberance? I don't think that's the case. And we actually talked about this on Robinhood Weekly yesterday. It's very hard for a company like Hood to be massively overvalued because we all get their numbers. Same thing with Schwab and IBKR. Like, if we get their numbers and we know how much growth is happening, and we get 66% of their numbers because we only miss 1 month, but we get 2 months, and this month we got December or this quarter, then it's like the market knows exactly what's happening. And they're not going to give Hood some crazy multiple just for the hell of it, because if Hood can't live up to the growth, like, why would you buy a stock that you know is not going to grow and give it a multiple? Usually people buy stocks at extreme multiples on the guess that the growth will be there, right? But if you don't have to guess for Hood because you literally have their numbers, then I think Robinhood relatively will always trade in line because the market knows what their growth is like. And so if the market's giving them a $50 bid right now, it's because they know that they can justify it with their growth. And I think that's why it's also very exciting to see Hood get some of the momentum that it's getting right now. Palo Alto Networks did get upgraded today, I think I got to check the exact upgrade, but I think to like $250, $300 by either by JP or Goldman Sachs. And that's why that one is up 2.26%. CrowdStrike, is that moving as well? CrowdStrike is up about 1%. Let's look at the speculative names. Spec names are all green. Rigetti, IONQ, D-Wave, QUBT, all the quantums are up. Color's down. MSTR is down 1%. We'll talk about Bitcoin in a second. Archer's up 1.9%. And then SoundHound is up 3% currently right now. 230 by Morgan Stanley. Okay, that's more, that makes more sense. 230 by Morgan Stanley on Palo Alto. And that's why they're up. Nancy does own this one still. So this has always been a Nancy stock as well.